There seems to be some perverse human characteristic that likes to make easy things difficult. Warren Buffett. Well, Mr. Buffett is right. So many times people forget what we are doing when we chart. And all we are doing is determining price direction. It is a binary decision, my friend. Is the stock or ETF you're looking at going up or down? And what do? We don't forecast. We follow trends. So many times folks can get greedy and they think, oh, well, if I could just figure out when this is going to rotate over, I could get in before then, anticipate it, and then ride the gravy train. And my question is, why would you not simply wait for a verified crossover going in one direction or the other that we have with our charts all the time when we have weekly vertical crossovers, which I'm circling for those that are watching, not just listening. And when those occur, you ride the direction of the weekly vertical crossover. It's not rocket science, it's charting art, and we do it here every day. 10 to 15 minutes is all we ask. If you haven't ordered our book, Charting Your Way to Wealth, we've got a autographed copy for you. I'll tell you more about it in a minute. Let's jump into these charts. First thing, S&P 500 down a little bit for the day, 0.27%. Everything else up. We see we're going into what appears to be the third week of up movement on the S&P 500. We haven't had a weekly vertical crossover yet. Looks like it's getting closer. We see the derivative oscillator gaining upward momentum. Price percent oscillators trying to pull away from the red signal line. Think we'll probably have one by the end of the week, but I'm not going to call it till it happens. What do we see on the 2-day chart? This 2-day candle just represents Thursday. It's an open box red candle, which means basically a slowing down of up movement. And like I told you, the chart's backed up a little bit, 0.27% for the day. You would expect that kind of candle. Price is still above the 2-day chart. And we see the derivative oscillator still gaining momentum. Price percent oscillator still heading up. Go to the 4-hour. And of course, what we're seeing, we talked about this yesterday, where the charts peaked, well, where they originally topped there on Monday the 28th. And they've been going sideways pretty much all week and crossing over, going down at the end of the day on Thursday. So they popped up on Monday and seen some up movement throughout the week. But again, on Thursday, started rolling over, going down. How hard a down is this going to be? It's the 4-hour chart. The weekly and the 2-day are still strong enough. Price is still above that 2-day trend line. And again, don't have a crossover yet, so we have no trade until and unless we end the week with a weekly vertical crossover. So we'll watch, wait, and see what there is to see. We go from the 4-hour back to the weekly and go to the Qs. Up again for the day, 0.05%. Big strong up candle. We did have a weekly vertical crossover last week. We had the jumping in point on Friday afternoon, somewhere around the 183 mark. I'm sorry, yes, 193 mark, sorry. And how high have we gotten throughout the course of this week? 197. So again, that's quite nice. We see that derivative oscillators gaining upward momentum, price percent oscillators heading up. And again, I'm just roughly calling whatever things ended over this past week. Since I'm doing the show live, I'm not going to go back and actually pull that. Those of you who did those trades, I know a lot of you jumped in on Friday, cleared out your practice trade on Monday after a hefty profit. That is great. What do we see going on? This latest candle moving just a little bit higher than the prior. Price percent oscillator heading up, derivative oscillator gaining upward momentum. We go to the 4-hour chart. And again, just like we saw, we have it slipping sideways after things topped on Monday. So again, we'll continue to watch, see what there is to see. Pay attention particularly to how those 2-day and weekly charts continue to do on the Qs. Don't know how long this run is going to be, but we will pay attention and let the charts lead us. Now we go to TLT. Had a nice run for a couple of weeks in TLT going down, but that does appear to be pulling back. We see we have a green spinning top so far for the week, right there at the weekly trend on this weekly chart, right there at the weekly trend line. Price percent oscillator's lost a little bit of its downward momentum. Derivative oscillator has also. We go from the weekly to the 2-day, and we see first day, this latest 2-day candle popping up quite a bit. Like we said, up 1.35%, pushing through the weekly trend line. First day of this latest 2-day candle. Price percent oscillator has turned from going down to heading up. Derivative oscillator losing downward momentum. Go to that 4-hour chart and booming up in the morning, followed by more up movement, again pushing through both morning and afternoon. That weekly trend line after hammering through late in the day on Wednesday, pushing through that 2-day trend line. So again, told you to take profits, pay attention to what's going on. Do have a lot of up movement. May offer another opportunity for jumping into a down trade if things really start to hammer down on that 4-hour chart before the 2-day or the weekly crossover going up, but had a nice successful run on 20-year bonds. Now let's go to gold. Gold is forming a green open box spinning top, second week in a row. We do see that the price percent oscillator is still negative. Derivative oscillator's lost a little bit of momentum, but price percent oscillator is still heading down. Gold is up for the day 0.1%, just 1% period. That 2-day chart looks like it's pulling back, trying to cross over, going up. So again, if you've been in gold on some kind of down ride, you pay close attention that the derivative oscillator's already flipped over, and that price percent oscillator is getting close to crossing over, going up. Look at that 4-hour chart, banging up in the morning, and further, about the same as far as topping out goes in the afternoon. That price percent oscillator that had crossed over, going down on Tuesday, flipped around quite quickly on Thursday morning, and then really spiking up for the afternoon. Derivative oscillator also gaining upward momentum. So again, got to wait and see how gold sorts itself out. When we do look at where things popped, we see that we still haven't reached a higher high on that 4-hour chart than we did last Friday, the 25th of October. So pay attention. Let's keep our eye on gold. And again, be sure to continue to watch the cues as they have moved up, and let's see what the S&P 500 is going to do by the end of the week, and if we're going to have that weekly vertical crossover going up. And again, let me get to that weekly chart to show that to you. Want again to watch for that. We will let you know, particularly if you're subscribed to our texting service, where you text to the number 33222 the word Charting Wealth. We will put you on that texting service list, and you'll get a notification. If you happen to be overseas or don't have the ability to use texting on a cell phone because you live in a cave in the mountains somewhere, if that is the case, don't worry about it. We do, during our comprehensive review and forecast every Friday, always announce weekly vertical crossovers. My friends, if you don't have our book, look in the show notes. You'll see a link to purchase it. If you live overseas, for some reason Square will not allow you to clear your credit card through them, but if you will email us, cw@chartingwealth.com, I'll make sure to send you a PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.